Welcome to Hyblock Capital. Today, we're breaking down one of the most practical tools for traders, previous day, week, and month levels, and how they can help you generate alpha in your trades. First, go to Indicators, and under the Order Flow and Open Interest tab, you'll find indicators for previous day, previous week, and previous month levels. Let's go through them one by one. The previous day levels are based on UTC time and calculated from the last trading day. They include 4 key points: previous day high, yesterday's top price; previous day low, yesterday's bottom price; previous day open, where the session began; previous day equilibrium, the midpoint, calculated as the average of high and low. You can customize the colors of these levels in the indicator settings. And to better separate days, right-click on your chart, go to Settings, and under Canvas, enable Session Breaks. This clearly shows where each new trading day starts. These levels often act as technical key levels. They usually increase the odds of that price level being support or resistance. A breakout above the previous day high, or a breakdown below the low, can trigger strong moves. Failure to break these levels may hint at reversals. That's why intraday traders rely on them for immediate setups. Next, the previous week levels. They work the same way, but are derived from the last week's trading range. They're most useful for swing traders, helping track weekly trend continuation or potential reversals. Finally, the previous month levels, calculated from the prior month's price action. These highlight larger structural zones in the market. Institutions and positional traders often reference them to build a macro trading bias. All 3, daily, weekly, and monthly levels, carry psychological importance and can heavily influence market behavior. They also often create high risk to reward opportunities. Because these levels are well defined, you can place tight stop losses while aiming for more distant take profits. The setups get even stronger when there's additional confluence at those levels, like open interest accumulation or a liquidation cluster. For example, intraday traders might buy near the previous day equilibrium or fade it, depending on the trend. Swing traders could enter longs near the previous week low with tight stops, capturing big upside if it holds as support. Positional traders may buy near a previous month low and target the previous month high for larger moves. By combining previous day, week, and month levels, traders can align short, medium, and long-term strategies, building an edge across every time frame. Start applying these levels in your trading with Hyblock Capital.